In the sprawling digital landscape of the 21st century, a new frontier has emerged, one that exists not in physical space, but in lines of code and decentralized networks. This is the world of cryptocurrency, a realm of dizzying highs, gut-wrenching lows, and relentless innovation that captivates dreamers, technologists, and speculators alike. It's a market that never sleeps, a global phenomenon that promises to redefine the very nature of money, ownership, and trust. But beneath the headlines of overnight millionaires and catastrophic crashes lies a more complex story. What is the true nature of this volatile ecosystem? Is it the future of finance, a fleeting digital bubble, or something else entirely? To understand the crypto market, we must journey into its core, exploring the forces that make it perpetually hot, relentlessly fluctuating, and a constant crucible of innovation. The story of the crypto market is, in many ways, the story of a rebellion. It began in the shadow of the 2008 financial crisis, a time when trust in traditional banking and government institutions had evaporated for many. From this disillusionment, an anonymous figure known only as Satoshi Nakamoto released a white paper for a peer-to-peer electronic cash system called Bitcoin. This wasn't just a new currency, it was a radical idea. It proposed a system where transactions could be verified and recorded on a public ledger. The blockchain, without the need for a central authority like a bank. This concept of decentralization became the foundational pillar of the entire crypto universe. For the first time, value could be transferred directly between individuals across the globe, securely and transparently, challenging a financial order that had stood for centuries. Early adopters were a niche group of cypherpunks, cryptographers, and libertarians who saw in Bitcoin the promise of financial sovereignty. For years, it remained an obscure digital curiosity, its value negligible. But as the network grew, so did its appeal. The narrative began to shift. Stories circulated of people who had bought thousands of bitcoins for mere dollars, now finding themselves sitting on small fortunes. This was the first spark that ignited the public's imagination, planting the seed of crypto as a new, accessible path to wealth. The allure was irresistible, a democratized financial system where anyone with an internet connection could potentially strike it rich. This initial spark soon roared into a wildfire. The first major bull run in 2017 brought cryptocurrency screaming into the mainstream consciousness. Bitcoin's price skyrocketed, climbing from under $1,000 to nearly $20,000 in a single year. The media went into a frenzy. Every news channel, every financial publication was suddenly talking about Bitcoin. This was the moment the market's infamous volatility was seared into the public mind. Fortunes were made, seemingly overnight. People who had invested their spare change were suddenly paying off mortgages and quitting their jobs. The euphoria was palpable, creating a powerful feedback loop. As prices rose, more people rushed in, driven by a fear of missing out, pushing prices even higher. But what goes up, especially in a nascent and unregulated market, must come down. The spectacular crash that followed was just as dramatic as the ascent. Billions of dollars in market value were wiped out in a matter of weeks. The critics, who had called it a bubble, felt vindicated. Many newcomers who had bought at the peak lost everything. This brutal cycle of boom and bust would become a defining characteristic of the crypto market. Yet even as the dust settled on the crypto winter of 2018, something remarkable happened. The market didn't die. The core community of developers and believers didn't abandon their projects. Instead, they kept building. This resilience revealed the second critical element of the crypto market: relentless innovation. The 2017 bubble was largely fueled by Bitcoin and a wave of initial coin offerings, or ICOs, many of which were little more than speculative bets with no real substance. But the crash filtered out the noise, allowing more serious projects to flourish. Ethereum, the second largest cryptocurrency, took the concept of the blockchain a step further. It introduced smart contracts, self-executing contracts with the terms of the agreement directly written into code. This innovation was a game changer. It transformed the blockchain from a simple ledger for transactions into a global, programmable computer. Suddenly, the possibilities expanded exponentially. Developers could now build decentralized applications, or DA apps, on top of Ethereum's network. This sparked the birth of decentralized finance, or DeFi. DeFi aims to rebuild the entire traditional financial system, lending, borrowing, trading, insurance, in the blockchain, making it open, transparent, and accessible to anyone without intermediaries. You could now earn interest on your crypto assets, take out a loan, or trade complex financial instruments, all from a digital wallet, without ever interacting with a bank. This wave of innovation brought a new surge of excitement and capital into the space, proving that crypto was more than just a get-rich-quick scheme. It was a rapidly evolving technological movement. The market's heat is also fanned by its constant fluctuations, which are a direct result of its unique structure and the psychology of its participants. Unlike traditional stock markets, the crypto market operates 24/7 across the globe. There are no opening or closing bells. This continuous nature means that market-moving news, a regulatory announcement in China, a tweet from a tech billionaire in California, a security breach in Europe, can have an immediate and dramatic impact on prices, regardless of the time of day. This creates an environment of perpetual motion and heightened sensitivity. Furthermore, the valuation of many crypto assets is not tied to traditional metrics like revenue or profit. Instead, it's often driven by narrative, community sentiment, and future potential. This makes the market highly susceptible to hype and speculation. The rise of meme coins like Dogecoin, which started as a joke, perfectly illustrates this phenomenon, propelled by social media trends and celebrity endorsements. These tokens can see astronomical gains based on pure momentum, completely detached from any underlying utility or value. This speculative fervor attracts a new generation of retail investors, drawn by the thrill and the potential for life-changing returns, further fueling the market's volatility. Every bull run brings a fresh wave of participants, each with their own hopes and risk appetites, creating a complex and often unpredictable market dynamic. As we stand today, the crypto market is a paradox. It is simultaneously a playground for speculators and a laboratory for one of the most significant technological innovations since the internet. It has created incredible wealth for some and devastating losses for others. Institutional investors, who once dismissed it, are now allocating billions, launching ETFs and offering crypto services to their clients. Governments around the world are grappling with how to regulate it, some embracing it as a financial innovation, others viewing it with suspicion and clamping down hard. This tension between mainstream adoption and regulatory uncertainty creates a constant state of flux, ensuring the market remains a hot topic of debate and investment. The story of the crypto market is far from over. In fact, it feels as though we are still in the opening chapters. The technology continues to evolve at a breakneck pace, with new frontiers like NFTs, non-fungible tokens, revolutionizing digital ownership, and the concept of the metaverse promising to build new virtual worlds on blockchain foundations. Each innovation brings with it a new wave of excitement, a new narrative, and new opportunities for both groundbreaking change and speculative frenzy. The journey into this digital frontier is not for the faint of heart. It demands a healthy dose of skepticism, a willingness to learn, and an understanding that high rewards are always accompanied by high risks. But one thing is certain: the crypto market, with its inherent volatility and unceasing innovation, will continue to be one of the most dynamic, disruptive, and captivating stories of our time. It's a testament to the human drive to build, to connect, and to reimagine the world, one block at a time. The heat isn't fading, simply transforming, promising that the next cycle of fluctuation and innovation is always just around the corner.